Hello, crypto fans. Thanks for visiting CoinGraphMarket. You can come to us for all your crypto needs. We cut through the jargon, simplify things, and explain the interesting world of cryptocurrencies in a way that's easy to grasp. What's our goal? To help you find your way through this digital cash revolution. Now, if you're as excited about this trip as we are, please subscribe, like, and leave a comment below with your ideas. Thanks for writing to us. Now, buckle up because we're about to get into today's exciting subject. In crypto news, Representative Don introduced a plan that would regulate digital assets and make it clear that the Federal Reserve has the power to create a digital dollar. The Digital Asset Market Structure and Investor Protection Act is the name of this bill. It is a big step toward regulating and legalizing digital assets. With this bill, the Securities and Exchange Commission hopes to protect customers, encourage new ideas, and take control of digital assets. What does this mean for XRP and other digital assets? It might mean a lot. In the first place, the suggested act would let the Federal Reserve print a digital US dollar. This move could make it harder to tell the difference between digital assets and standard financial systems. This could change the way we think about money. You may ask what this means for XRP. Anyway, since XRP is a digital product, its place in the financial world could change in a big way. In the event that the Federal Reserve produced a digital dollar, it might make it easier for more people to accept and use digital assets such as XRP. Let's not get too far ahead of ourselves, though. Always keep in mind that this is just an idea and not a deal. There are a lot of things that affect this, and digital assets are always changing. But the fact that this bill was introduced shows that things are moving. Digital assets have a lot of promise, and governments and financial institutions are looking into ways to add them to the current financial system. As the line between digital assets and traditional banking systems gets less clear, it could have a big effect on cryptocurrencies like XRP. When it comes to rules, many people don't understand how the SEC feels about digital assets. It has been hard for the Securities and Exchange Commission SEC to keep up with the fast-changing world of cryptocurrencies. Their method, on the other hand, has been full of contradictions and inconsistencies that have made things more confusing than clear. Take the case against Ripple for selling the digital asset XRP as an example. The SEC says that these sales were actually deals involving securities, which has a lot of regulatory implications. This action has led to a court case that has shown the SEC's attitude to digital assets is not always consistent. In one case, former SEC employees talked about their personal thoughts on crypto as a currency, not an investment. However, what they did after saying these things was different, creating a cloud of uncertainty that has made people less confident in the regulatory situation. That kind of confusion is a problem for more than just the companies that are fighting in court. There are bigger effects on the crypto space and investor trust because of it. A big problem for people who want to trade in digital assets is that it's not always clear what the difference is between a security and a currency. It makes people afraid, which can stop them from coming up with new ideas and investing. Besides that, there are effects on the larger financial environment from this lack of clarity. There are no rules yet for fintech startups or regular banks that want to try their hand at crypto. Everything is in a regulatory limbo. Without clear rules, they have to find their way through a confusing and often contradictory maze of decisions and comments. To make rules about digital assets more clear, it's important, and we'll be keeping a close eye on this. Because digital assets are always changing, the rules that guide them must also change. We can only fully use this exciting new area of finance's potential if the rules are clear, consistent, and fair. In the crypto world, the latest rate hike by the Federal Reserve has caused a lot of talk about the market as a whole. It is important to know that what the Fed does can have a big effect on risky investments like cryptocurrencies. It's clear that monetary policy is getting tighter because the Fed decided to raise the federal funds rate by 25 basis points. This move basically raises the cost of borrowing money, which can slow down spending and investment. You may be thinking what this means for Bitcoin and other cryptocurrencies. As it turns out, cryptocurrencies are often seen as a way to protect against inflation. This is because the Federal Reserve usually raises rates to fight rising prices. This might make cryptocurrency more appealing, at least in theory, but things can be very different in real life. Rate hikes can have unclear effects on the market, which can sometimes make the market more volatile. This kind of change can have an effect on the value of digital currencies. The price of Bitcoin might go down if buyers start to sell riskier assets like cryptocurrencies and buy safer, more traditional ones instead. If investors see the rate hike as a sign of a strong economy, on the other hand, it could boost trust in risky assets and possibly cause the price of digital currencies to rise. Also, keep in mind that there are other important factors at play here. The ongoing case against Ripple. Investors all over the world are eagerly waiting for the result of this high-stakes game. Allow us to now talk about the half of Bitcoin. The crypto market is likely to be affected by this event, which is set to happen in April 2024. This is why Bitcoin halving means that the price for mining new blocks is cut in half. This lowers the number of new Bitcoins that come into circulation. This drop in supply usually causes more people to want to buy it, which has caused the price of Bitcoin to rise in the past. That being said, it's not just about Bitcoin. The whole crypto market is also affected by the split event. The ripple effect, of this event could make the prices of other cryptocurrency go up, including XRP. The case against Ripple and the splitting in half of Bitcoin are more than just news stories. They have the ability to move the market and have a big impact on the direction of the crypto market. These are the events that will be important to keep an eye on in 2024. The results of these events could have a huge impact on the crypto world. These events could make a big difference in the crypto world, and we'll be here to help you through it. What does this all mean for XRP and how the US Federal Reserve plans to use it? We've been looking at how cryptocurrency is changing, and now it's time to talk about what XRP could accomplish. To begin, let us look at the basics. A technology company called Ripple Labs, Inc. made XRP a digital asset in cryptocurrency. The business specializes in the real-time gross settlement system, trading rates, and a network for sending money. XRP was created to make international transactions faster and safer. This one-of-a-kind feature has caught the attention of many financial companies around the world. Now, the idea that the US Federal Reserve might use XRP is not as crazy as it might seem at first. There has been talk at the Federal Reserve about a digital dollar, and XRP could be a big part of this because it's fast and doesn't charge much. There might be a better way to send money around the world with XRP. It might be able to serve as a bridge currency, making it easier to swap fiat currencies. But there are some problems with this possible application. The case that the SEC and Ripple are still in is a big one. Aside from that, the SEC says XRP is a security and should have been listed as such. On the other hand, Ripple says that XRP is a currency. The result of this lawsuit could have a big effect on the future of XRP and, by extension, on the Federal Reserve's possible decision to use it. Let's make up a story where the case ends in Ripple's favor and XRP is recognized as a currency. Big financial organizations like the Federal Reserve might be able to use XRP in their work now that this is possible. In the event that the Federal Reserve decided to use XRP, it could greatly raise the value of the digital currency. In the event that the case does not end in Ripple's favor, it does not necessarily mean that XRP will fail. Over 300 financial companies around the world have already teamed up with Ripple. A bad result might slow down XRP's growth in the US, but it might not have the same effect around the world. Please keep in mind that all of this is just a guess. The world of cryptocurrencies is quick to change and hard to predict. It's still early days for regulations, and things can change quickly and radically. Or the lack of it has an effect on the crypto area. After that, we talked about the Federal Reserve and how it affects the price of Bitcoin. We talked about the ongoing case against Ripple and the excitement about the upcoming halving of Bitcoin. Finally, we looked very closely at how to speed up the implementation of XRP. The world of cryptocurrency changes all the time, so it's important